Welcome, everybody. Stephen Mead here for Domicile Real Estate for people who love houses. This is our whole market update for basically the week ending rather, May 25th, 2021. I can't believe it. We are almost hitting the year market. One of the things that we did, we released this a couple days ago, is a market video, our first on the bubble, where we go over the numbers and answer the question everybody wants to know: are houses too expensive? So if you're watching this on YouTube, we're gonna have a link down below in the description of this video where you can actually go to that video directly, which is pretty awesome. I highly recommend it. I think it's probably one of my favorite videos that we've ever done. Now, without further ado, we're gonna get into this week's whole market update. Kind of some interesting results, and we're gonna talk about at the end a little bit about some of the changes that I think I see coming down the pike. So without further ado, we're going to jump in to our market stats here. Here we go. Okay, so let's see here. We're on our last page there, but let's go back to here. Okay, so one of the things that we like taking a look at, right, is our total active listings. One of the things that you're going to notice here, if you're taking a look, is that we actually did see a slight decline. Overall, since these are still some of the highest numbers we've seen on active listings in our under $1 million category since about February. I think our market has, it kind of jumped up here and then it's retreated slightly. But still, these are generally positive numbers. If you're in our $1 to $2 million category, the news is actually even better. That increase in inventory is really held over the last 2 weeks. So I'm kind of excited about that. I think for our buyers, from a seller standpoint, no, you have not missed the boat. This is still very low inventory. It's just not quite as low as it once was. Moving on, one of the things I want to talk about is kind of really getting down to these fundamentals of supply and demand. So the first thing we're going to talk about is supply in the marketplace. And this shows you all of the new listings that have come on the market over the last 14 days. The great news is in this under $1 million category, indicated by the blue line, that is actually increased. And you'll see really we're kind of touching upon our high points from the past of new listings coming into the marketplace. Down here in our $1 to $2 million category, this is definitely setting kind of a new high for number of listings entering into the marketplace. I think a lot of sellers are kind of coming back to the table. As you can see here, these numbers are actually really strong when you compare them to kind of our most recent low about a month ago, where we really where we had fewer listings coming into the market. This is probably about a $300 or $400 difference in the number of new listings. Wow. You can tell where my mind is right now. Paying bills earlier today. If we're to flip this and kind of look at the demand side of things, this is really where it gets interesting, right? And this is the reason why we divide our market into under 1 million and 1 to 2 million. Just as a reminder, this is for Los Angeles and Orange counties. The reason why we do this is because these markets don't always move together. The consumer decision-making process is actually different in the under 1 million category than it is in the $1 to $2 million category. And if you look here, you can really see a difference in what's going on. Down here, we see new escrows has steadily climbed, but look what happened over here in our under 1 million. Really, we kind of bounced up probably another 150, maybe 200 new escrows in the past 2 weeks versus where we were last week. And really kind of hitting at a high. And one of the things that I think is kind of cool about this chart is when you look at this under 1 million category, of really just seeing probably since about the middle of February, really we've been right kind of bouncing between 3,000 and 3,200 houses going into escrow, every 2 weeks. I think that number has really remained steady as we've gone throughout the spring. I think that means, demand is robust, and I think it's robust for a lot of reasons. I think it's a great time to buy a house. I don't think it's a particularly easy time to buy a house. So buyers are out there and they really want to be in the marketplace. If anything, when we see these drops, I think it's a result of either interest rate spikes or sort of some buyer fatigue setting in. We've had 2 weeks where the market's been a little bit easier, and look what happened. Buyers swooped in and they went under contract on houses. This really is kind of the hallmark of sort of, a constrained supply. And I know that's a term that I've used several times before. And basically, what that means is that means you run up against sort of this like temporary limit where you can't really sell any more houses. And then the second, if the market eases a little bit, what happens? Buyers swoop in to kind of pick up the slack. And that's the reason why this demand kind of started going up. I'm going to jump back into this here. If you look, our demand here, it kind of sprung right up into February, and then really like it just didn't have anywhere to go. We just didn't have enough houses to sell people. Like we just couldn't make new escrows happen. We were limited. So if we take a look at the absorption rate here, and I think I've got my wrong pointer on. There we go. Next slide. There we go. Our absorption rate. Again, this really kind of tells a story of sort of two different markets. Our blue line, again, is our under 1 million, more of an entry level market. And our red line is more of a move up or luxury market. That absorption rate has dropped to kind of a bit of a new low, actually, in that 1 to 2 million range. But look what happened. We had kind of a low absorption rate. We bounced off of it. Now we're kind of right in the middle of the pocket here. Really, we've been kind of flirting in this upper 80s, mid to upper 80s, pretty much the whole time this spring. This is still probably, relatively speaking, a pretty decent time where absorption rate is lower. But I think what we're seeing is, really that demand is just being kind of cut off by not enough supply. If we look at our closed prices, though, this is one where I want to talk about something for a second, and I'm going to talk a little bit, and then I'm going to jump back into the chart because I want to set this up before we go through the numbers on this. So, there's an index out there called the Case-Shiller Index. I think some of you have probably heard of this. It's an index where they try to look at the same house one for one and see how the price has moved, and try to come up with this sort of market movement percentage. Their number in April was that the market basically moved 13% in 1 month. Now, again, April is really talking about the transactions from March, not talking about the transactions, the ones that closed in April, which is the ones that were negotiated in March. Now, 13% in a year is a really great year for housing in terms of appreciation, but 13% a month is pretty nuts. And I think there's this notion that that's not a sustainable number. I mean, that would mean home prices well more than double in a single year. I don't think that's very sustainable monthly numbers. So let's jump back and let's look at this price chart and see if we can kind of fit that in and make sense of that. So let me grab my pointer here. Again, our yellow line here, this is our 75th percentile. Now, if we were talking that there was a pretty big jump in prices between, March and April, right? Well, we look at this pretty nice big increase that we saw back here in sort of these March numbers. I think what you see, though, that's really fascinating to me is look what happened here, though, starting around the beginning of April. We really saw this 75th percentile number. I mean, it jumped around a bit, but look where we ended up. We have ended up at prices that look remarkably similar to about a month and a half ago. Now, again, these are 6 to 8 weeks in the past, so this may not indicate what's happened in the last couple of weeks. Look down here at our median price. Where were we towards the beginning of April? Right here, we were right around $800,000. Where did we end with our most recent data? Right about the same. But look, we had a sizable increase between the beginning of March to the beginning of April. Even here in our 25th percentile entry level, again, big gains were seen in that time period, and then it's been fairly flat with some fluctuations. We're not ending up really in a totally different place. So, I've talked about this a whole bunch. People talk about home prices are going to go up 6% this year. And in our minds, we all think that what that means is it's going to do this gentle graph like this. That's not how it works at all. Our market moves in kind of these fits and starts where it takes a jump, then the market sort of absorbs that new pricing information for a little while. And I think that's the reason why I'm maybe a little bit less concerned about a month where prices moved 13%, according to their calculation. And I think that might even be a national number, so we can't always apply that to our LA and Orange County markets here. But this is the way our market tends to move. It tends to move in kind of these fits and starts and periods, and then like a sort of a cooling off period. Then it might go up a little bit more, and that's just the way our market moves. And I think it's really important to kind of bear that in mind when you're looking at some of this pricing data or when you hear pricing data in the news. So if we move on here, our next chart is our percent still active after 14 days in the market. Now remember, when these numbers go up, that means the market gets easier. When these numbers go down, it means the market got trickier. And look what happened week to week. Both of these dropped a little bit, indicating that this is a market that feels a little bit more competitive. Now, the good news is, even where we ended up in our under 1 million, we're still way better than our low point. Back here in February of this year, towards the end of February, I mean, this was not really a happy, fun time to be in the market. Things are definitely better than they were during that period of time. Our 1 to 2 million range has been a bit steadier. This is not out of the realm for where this is. But I think if you're in that entry level market, it's not maybe as good as things were last week, but it's still overall pretty good in terms of being a little bit less of a competitive market. Moving on, we've got our list to close ratio. I always give the cautionary tale here that this is based on closings that happened this past week, which means we're thinking about contracts that were 4 to 6 weeks ago. That 1 to 2 million range where you're still holding at a constant percentage, but it looks like possibly at the low end, what we're seeing sellers do is I think we're seeing sellers get very, very aggressive on their list prices, listing higher and higher. And that means when these files eventually close, they're not quite as far above the list prices they've been. I think a lot of sellers have really been caught up by surprise in a good way where the market has been. I think agents are now catching the drift and they're encouraging sellers, or sellers are putting in the idea, let's list a little bit higher than we had anticipated and see what happens. And the net result for that is going to be that these close to list ratios are going to start to walk back towards that 100% number. Also, I think as a market stops accelerating, you have this kind of sense of momentum, right? Where there's this delay. In most cars, right, you hit the gas pedal, nothing happens for a second or two, then the car starts going. And then overrun is the opposite, where there's this momentum, right? Like you take your foot off the gas and it keeps accelerating for a second or two. That's kind of the way this market works. Things accelerate. It takes a little while for sellers and agents to kind of catch on. And then as we get to that point where if the market starts flattening out, there's this little bit of overrun where some people keep listing a little bit higher, thinking that the line has kept moving upwards on price, and that's not always the case and always true. So if we're going to go to our days on market, I think this one kind of really says a lot. I think we sort of hit under this 20-day period here in our under 1 million, and really that feels like a sort of hard structural limit. I don't think it can really go that far below that number. That basically says it went on the market, we gave the minimal marketing time, and we jumped into escrow. If you look here for our 1 to 2 million, this market is still pretty strong. Even though we saw the inventory go up just a little bit, there's still buyers in that market space that are soaking up those listings because this days on market number has not started to ratchet upwards. Finally, we're going to talk about affordability for a second based on our median price and our prevailing interest rates. So, the difference between last week and this week is that the prices moved a tiny bit and the interest rates moved a little bit. And that put us kind of here on this 113, 114% of our baseline. The great news in that, the absolutely wonderful news, is that wages have in fact on a household basis in California have increased by that. And just to give another plug to sort of our bubble talk video where we talk about our house is too expensive, we actually bring in that wage conversation, that sort of household income conversation to give a reference point to sort of these payment levels, right? To understand, are we jumping ahead of wages, and by how much if we are jumping ahead? Are we in kind of a danger zone on that or not? And finally, you're going to see here our prevailing mortgage rates. We've just bumped right back to 3%. Still not a high point for the year. We're right back where we were at the beginning of March as far as interest rates go, but not at the point we were at, back in the beginning of the year, which was, more in kind of the upper mid twos. And, thank you guys so much for watching. We love doing these videos. We love the comments. We love the interaction. If you're watching this on YouTube, definitely don't forget to like, comment, subscribe, and hit that notification bell on there. If you're watching this on Facebook, the link is down below, the link to our YouTube channel. Absolutely, please do become a subscriber. There's some videos we toss up there that do not make it to our Facebook page. And starting going forward, like I said, you're only going to see half of our market updates if you wait to see us on Facebook, but you're going to be notified on all of our market updates as well as our extra videos that we are doing if you're a subscriber to our channel. As always, if you are looking to buy or sell in Southern California, definitely reach out to us. If you've got real estate questions, we are here to help answer those. And if you do a really cool question, we'll make a video about that so we can share the answer with everybody as well. Anyhow, thanks so much, guys, and we will see you for our next update, which will be on Friday for our first time home buyer market update. That will not be on Facebook Live. That will only be on our YouTube channel. Thanks so much, everybody.